It's a bit of an odd time to be a student loan borrower. Payments and interest for many federal student loans have been paused for over 2 years. Meanwhile, the student loan system is undergoing significant upheaval as loan servicers change, and the Biden administration has temporarily changed the rules for existing student loan forgiveness programs while also reportedly considering broader loan cancellation. In this time of unprecedented uncertainty, there are some actions that student loan borrowers may not want to take, at least for now. Now may not be the best time for borrowers to pay off their federal student loans, if they are in a position to do so. Government-held federal student loans are still covered by the ongoing relief provided by the CARES Act, which has paused payments and suspended interest accrual since March 2020. President Biden's most recent extension of that relief ends on August 31, 2022, but it could be extended even beyond that date. Given that the Biden administration is considering some form of broad student loan forgiveness, there's no harm in holding off on a full payoff, particularly given that interest remains at zero and no payments are due until September at the earliest. A big reason to refinance student loans is to get a lower interest rate. But under current law, the only way to refinance a student loan is through a private lender. And borrowers who refinance their federal student loans through a private lender would be permanently walking away from the consumer protections and program benefits of the federal student loan system, including the possibility of student loan forgiveness. Interest rates are at 0% on government-held federal student loans until at least September, and borrowers aren't going to get a better rate than that right now in the private student loan market. Borrowers who are covered by the ongoing student loan payment pause don't need to make payments. Voluntary payments are allowed, and since there's no interest accruing, any payments that are made during the suspension period will go further towards paying off your loan balance. However, given the lack of interest accrual, there's no real difference between making a regular payment each month and waiting until the end of the payment pause period to make a single lump sum payment. Making a lump sum payment at the end of the payment pause could give borrowers more flexibility, particularly for unexpected expenses or hardships that arise during the payment pause, as well as a bit of a strategic advantage while we wait to see what, if any, additional student loan relief the bid. Borrowers who have been making voluntary payments during the payment pause can request a refund of those payments by contacting their loan servicer, according to the Department of Education. While it may be easy to simply ignore your student loans if they are covered by the ongoing payment pause, that might be a mistake.